For that, we are being joined by Mr. Gopal Kabra, who's the CMD of GK Energy, joining us on the show. A very good morning and thank you so much for your time. And firstly, with respect to the earnings, help us with more finer details on this one, because on a quarter-on-quarter basis, yes, of course, there's a decline on your top line. What was it due to the delays in the project execution, or was there any other factors that were at play?
Yeah, thanks for inviting. Basically, Q1 and Q4 have the different trajectory. So our business start from September onwards because when the farmer need the more water, right? So Q4 was the closing of the close to summer. So always we have the great business that time. And Q1 because of the rainfall, it goes slow down. So it has been the history for the GK Energy or the in the sector that Q1 would be always 10 to 15% of the annualized volume. So that's why the comparison between Q1 and Q4 of last year would be difficult for us. But if you compare Q1 of current year and Q1 of the last year, then you can see that we have almost growth of the 100% over there. So we have been increased from 151 to close to 300 crore. PAT has been increased, gross margin has been increased. So this is the way would we look towards the business.
Okay, so Mr. Kabra, that explains your numbers partly, but the EBITDA margin, let's talk about that. Your margins have declined by about 100 bips. Now, this has happened despite a reduction in your installation costs. Could you help us understand why this has happened and any outlook on margins that you could share with our viewers?
See, overall profit in terms of the gross margin, the PAT, if I look from Q1 of last year to Q1 this year, it has been increased. So what you're talking about with the COGS calculation, so for the installation plus some sundry raw material as a strategic call, we have handed over that part to the INC partners. So they are doing the local procurement, and that is overall improvement in the margin you can see in terms of the PAT if I talk about.
All right, but along with that, the increase in the raw material cost did offset the installation cost savings. But do you expect this trend to continue?
See, raw material somehow we are able to control very well because for our the major raw material which is a solar module, and for that the major input is a DCR cell. So we have the long-term contract for the DCR cell. I think we are among the only one company, those who are not the module manufacturer but do log the DCR cells. So we see that the future also going ahead, we would be able to improve the more margin because certain price locking is done with us. We are not getting effect of the raw material increasement.
Right, okay, so that's your take on raw materials, but let's also talk about the core EPC business that saw a significant decline of about 21% on a sequential basis. For your core EPC, help us understand what your specific bottlenecks were or any project milestones that were missed in Q1 that you see ahead spilling into the rest of the quarters.
See, definitely rainfall was not predicted in the month of May, what has been arrived into the major state where we are working. So, even it is pan India wise, we have seen the flood and the rainfall, heavy rainfall. So definitely that was the one of the affecting thing. So that is spill over to the next quarter and we have recovered, betterly.
Well, Mr. Kabra, now trading of solar cells is a very small portion of your revenue right now. Well, what's the expected contribution going forward? How do you plan to scale it up?
See, solar cell trading in the sense we are going into the ahead as we have mentioned in our document while the listing as well for the module manufacturing line. So personally, our management think that before entering into anything, you should do the deep dive first. So right now we are into the deep dive. We are, as I have already mentioned, we are in the advanced contract for the cells. So we are procuring that and we are giving to LLM manufacturer who are giving us the modules. And that would be, little bit thoda aur badega, not much more.
Okay,
in
so
percentage.
All right, so we'll watch out for that segment. Mr. Kabra, let's talk about your order book. Now, your order book ahead of the IPO was close to about 1,030 crore rupees. Help us understand where it stands now. What's the projected revenue recognition schedule for your order book?
YOY, definitely we will have an increase. You can assess the trend from the, better trend you will be looking from the Q to Q. And closing of the, we are right now with around 850 crore order in hand right now to be executed.
And Mr. Kabra, lastly, 1 gigawatt of Maharashtra facility backward integration through. In-house, the solar panel was to be operational by September 2026. If you can help us with the latest development there.
Land procurement has been done, and the civil work is, we are in process to finalize the EPC company who is going to do the construct the plant. So probably we would be doing in the coming 2 to 3 quarters, 2 to 3 weeks. We are going to freeze that thing. So we will keep you posted on that as the progress goes.
Okay, Mr. Kabra, excited to chat with you once again on that. And once again, thanks so much for taking the time out and speaking to us. On that note, we'll let you go.